more voices will be shared. All right, for any of you that might be joining early, I'm going to have to up my game and have some music for you next time, like something. I'm not sure, Kayla, what is your go-to summer song right now? Do you have one around the Jones household?
Gosh, we listen to a lot of country. I know that's not
Yeah?
everybody's favorite, but
No,
that's our jam right now.
I love it. It's commonly safe across all age segments. Do you
Right.
know a classic for me? And sorry for boring anyone that might be listening here. Boys of Summer. There's Don Henley.
Mhm.
Don Henley, Boys of Summer. I actually like this version that Steve introduced me to, my husband, when we were dating, by the Ataris. It's kind of a bit of a rockish version, but there's something about that song. Love it. Love
I'm
it.
gonna have to remember that.
Okay, make sure. So that might be something I have to incorporate next time for intro music. All right. Kayla, I know you're hyped. I know you're excited. I know you're ready to go. Oh, look, I have some music here. Hold on. Hold on, you
All
guys.
right.
Oh, what are we what are we wanting? Okay. All right.
That vibe.
Okay. Feeding the ducks. Huh. Okay. Feeding the ducks. All right.
We seem official.
We do. We do. Apologies that you all had to hear my thoughts before. Hello, hello, everyone. Let me turn off this mood music that I just found, and I'll figure out a way to get the Song of Summer, the Boys of Summer on for any future conversations. Kayla, I'm going to make certain that I send that to you in the future. I am so thrilled, Miss Kayla Jones, that we are sitting here together finally. Finally, I feel as if we're long-term friends, even though we've only known each other in the big picture a short period of time.
Mhm.
I know, I
I love
know. Why don't we go ahead and start with some introductions, Kayla? And I'm going to ask you to kick this off, my dear.
sure.
Tell us about you.
Of course. Where do I start?
Where do you start?
It's been a long road. So I guess with anything, you start. Let's start now, and then I can give some background. So today, I am the Chief Fintech Banking Officer for Focus Bank out of Southeast Missouri. We're a community bank through and through. We started in the 1930s in Charleston, Missouri, and then grew. Today, we sit just over 800 million in assets. So in 2022, I was brought on to start our fintech sponsorship division, and it has been a roller coaster of a ride since then, but it's been great. So today we've got some partners live. We're continuing to build out our pipeline. But my history in banking actually goes back to July will be 20 years. In 2006, I started in banking with Focus Bank, actually, as a part-time teller all those years.
Okay.
And so then my career took me around several places. My husband and I have moved around the state of Missouri a little bit, and so I've had the pleasure of working for several fabulous financial institutions in that time of varying sizes, everywhere from Focus at the time was a lot smaller. I've also worked for a bank that's part of a holding company that was in the 10 to $15 billion range.
Nice.
So a lot of varying experiences and a lot of really good experience and some really good mentors along the way as well. And so, getting into fintech totally changed the game for me because it kind of took all of the pieces of banking that I really liked and put them all together and then hit fast forward on the speed of all of it.
Oh, so true. I'm picturing the little the two little arrows that we see to
Yeah.
represent fast forward. That is to me what embedded banking, sponsor banking, fintechs overall has been. In fact, I once wanted to start a newsletter or something called BaaS Forward with those two indicators, and my husband talked me out of it. He's also in the space. Well, I'm going to go ahead and talk just a brief moment about me. We're more here to showcase the amazingness of Kayla Jones and the Focus Bank family. But for those of you that I haven't had the opportunity to meet, my name is Stacy Bishop, And I spend my days just in the middle between fintechs that are selling to banks in a vendor type of scenario. So Kayla, people reaching out and wanting to sell you stuff, new technology to make you all even operate a little differently. But I get a chance to be, probably because of my husband, if I'm really honest, hate to give him too much credit, but you got to give it where it's deserved. But I also spend time getting the chance to speak with amazing sponsor banks like Focus and sponsor bankers like Kayla, and helping and discussing opportunities to partner with fintechs. And that's what we're here to discuss today over the course of, I don't know, next 40-ish minutes. We'll see where the conversation takes us, folks. But Kayla and I are both very passionate about making certain that the right fintechs find the right sponsor banks. And I can come at this from definitely different angles. And I know Kayla will be able to complement these discussions as well. But one of the things that Kayla and I had discussed that I think just warrants a broader conversation is there's a lot of fintechs out there. A lot of fintechs that are looking for sponsor bank relationships. And in some cases, these brilliant individuals that are developing and designing and spinning up new fintechs and seeking or scaling their end user base, they may not have a great deal of experience about how to go through the process of partnering with a fintech bank. And in some cases, Kayla, I think it can be somewhat intimidating. These folks are used to moving fast and getting deals done because people sign up for their solutions often online or in app. But that's not exactly the way the banking environment operates. And folks, it's not because bankers are slow or overly conservative. It's because there's a process to keep this big environment safe. So there's some things I want to get into, but I would be remiss, Kayla, if I didn't mention that we often equate these partnerships between fintechs and banks to an actual relationship partnership where, do you know what I mean? People come together. And I get the impression sometimes that it's easy for fintechs to say, yeah, I'd really like to date you and to take you out, but you're needing to go ask your parents. I need to submit a blood test and a background check and my bank accounts and ensure that proof of insurance before you'll get in my car to take you to the movie and dinner. It feels like a lot just to have some of these conversations. I want to see, first of all, where do you land on that? How does that strike you?
Sure. I mean, when we started building out our onboarding process, what were we going to request? When was the timing for each of those requests? Because obviously when you're first starting to date, you're not going to share your social security number and introduce them to mom and dad, right? So, at what point did it make sense to introduce each of those pieces of information to give us what we needed on both sides to make a decision? Does this even fit? Do we even like the same things? Do we have the same interests?
Yeah.
Something as simple as, does the product type fit?
Yeah.
A lot of sponsor banks have an expertise. And so if I'm a credit bank, which I am, we do consumer credit, and someone comes to me with a deposit program, that's a deal breaker right out of the gate, right? That's not what we do. So beyond that conversation, where does it make sense? But it can definitely be overwhelming. We have really made it a continuous process to almost constantly reevaluate, does what we're collecting at the time we're collecting it still make sense? And even as recently as within the last few months, we realized internally that some of the conversations we were having were probably a little too early. And we were coming across things that were like, well, this other question that we're asking is the right timing and it's potentially a deal breaker. So why are we requesting all of these things that are more in the weeds before we've gotten through the questions that are potentially obvious deal breakers? So things like, do we even have the capacity to take on a program like this based on how they're growing or the current size of the organization? Would it require, added complexity in our oversight or added staff? Those kinds of things are important questions to ask early on, because if the answer to that is no, if you're going to have to hire a whole BSA team to support a program that's large and complex and you don't have the capacity to do that, then why are we looking into compliance policies and disclosures before we get to that point?
That makes such sense. And I love your analogy of, not introducing the parents, too early or getting too personal before it's actually, warranted. You don't have to talk about past relationships before on that first meeting. But that makes total sense to me, that you're continuing to refine your own internal qualification process. And it sounds like, Kayla, don't let me assume too much here, but it sounds like you're looking to protect everyone's time and a relationship by being able to say, we're probably not your bank early. Is that fair to say?
Absolutely. We understand our fintech prospects and partners are trying to run a business, and they're trying to get launched. And oftentimes, especially if you're talking to startup organizations, they need to get somebody that's going to run with their program and be able to scale so that they can go out and raise additional funds. They have a certain amount of money they've raised that they need to be able to get them to launch. And if we're sitting here having conversations for 6 months without any answers, it defeats the purpose for everyone and wastes resources and valuable time on both sides of the equation. So definitely something that we try to keep in mind and ask, how quickly can we make a decision about whether or not this is viable? And as long as the answer is yes, we go a little deeper and a little deeper. But as soon as we see a no that we can't work around, we try to make sure we're communicating that quickly.
I think that's respectful to be able to communicate that quickly. And something that I would just like to highlight, it may not be as topical to this discussion today, but I continue to be impressed by the bankers in this space, because you all are friends. People might think you're competing, and I guess in the purest sense of that term, sure. But because everyone has their own specialties, their own risk profiles, I find that there's a lot less competition and absolutely more of a camaraderie across the space. If you're not able to place someone, you may reach out to another sponsor bank. You might reach out to me to see if I know somebody that's reaching or looking around. And that's something I continue to see in this space. And when you speak with the right sponsor banks from the beginning, even if it doesn't go anywhere with that sponsor bank, it doesn't necessarily mean the end of a conversation or help from that sponsor bank. And that's what I've seen.
Yes, I completely agree. We've had several conversations that we've been able to say, hey, this doesn't fit within our risk profile or where we really excel, but we know people. And so we've sometimes we've put them in touch with someone like a Stacy Bishop who can, work things over and tell you, hey, here's who I know that might be. Other times we know our counterparts at another sponsor bank, and we're able to say, we know for sure they do this and they may be a good fit, and pass them off. There's also program managers and consultants. I mean, so getting in front of the right people and making sure you have a network of individuals who can kind of have those conversations with you is definitely important. But I would agree. I think, we all have a job to do at the end of the day, and we all want to win the business if we are doing the same thing. But I have seen the same, where the sponsor banks that I've had the pleasure to encounter as we've launched this division have really been willing to offer advice when they can, put you in contact with the right kind of people. We've had some of our contacts reach out and say, hey, do you know anyone over at such and such bank? I know you guys don't do this, but I'm looking for an introduction. And we've been able to do that. And everyone we've dealt with at the other banks, it's an excellent network for sure. And we all have the same rules to play by. So, it's easier to just kind of be on the same team in that sense.
I love that. We are going to get tactical here in a minute, Kayla. But before we do, something I've been thinking about quite a bit lately, because I've had a couple of conversations within the past 4 or 5 months with some early stage fintech founders that believe they need a certain sponsor bank logo. And I don't even know where I'm going with this or what the question is, but I just want to approach it and give it some space out here during our conversation. Here's what I have personally found. For fintech founders that might be enamored with a logo, they might feel like they want this logo to be their sponsor bank, or these two logos to be their sponsor bank. I feel as if they're often surprised at what the conversations look like, perhaps what the economics of the arrangement might look like as well. And what I want to just give some voice to is there are a number of possibilities. There are a number of players. There's, a little over 200-ish sponsor banks right now out in the US by the last accounts that I saw, 220, 221-ish. That might be updated now. But the large logo you might feel that there's gravitas. I think you'll be extremely surprised by the other players in the space and the level of guidance, the level of interest in helping your business to do well, and the economics that they might put in front of you. And I'm not trying to disparage larger logos. They do a great job, and I'm sure they do a great job with many of these pieces and parts as well. So I don't know that I have a question for you, but do you have any comments around that thought?
I do. I mean, I tend to agree with you, and I would just say there is no one size fits all for sure. I know it's tempting to gravitate to the bigger logos. And I mean, I know that's easy for me to say as I sit here as Focus Bank, who's not one of the big names that everybody recognizes in the space, will say yet. But there are definitely trade-offs to every side. So, if you're working, there are definite benefits to some of the larger players. I would say, especially maybe for some of the very well-established, very large programs who don't require a lot of, I hate to say hand-holding. That's not really but maybe not as much guidance, or don't want or need as much one-on-one interaction. They don't necessarily care if they can get a hold of Kayla Jones.
Sure.
They just need to run their program, and they need a bank who's got the capacity to support that. Yeah. But if there are nuances to almost every program really that may necessitate some one-on-one conversations, and knowing that your bank is invested, and that's not to say that the larger players aren't doing that, but sometimes a smaller program is better equipped to handle some of those conversations because there aren't so many moving parts. And so I would just say the best recommendation I could make as people are having is don't count anyone out just based on the logo that's behind the email, go into it kind of blind as far as which bank you're talking to, and really look at what's most important to you as a founder, as a leadership team. Do you need more one-on-one time? Do you need a bank that's going to have the capacity to have weekly standing calls with you as a touch base while you're trying to scale your program? Do you need additional expertise? Look at the management team, look at what kind of support staff they have. All of those things factor in. And flexibility, I have found, is a big piece. The bigger programs are going to, out of necessity, have to be a little more rigid and don't have as much flexibility, because you just can't have as much flexibility when you're that large. It would be way too easy. And sometimes banks that are on the earlier end, especially if they've established a good process, are able to have a little more flexibility in what they can accommodate, the economics of the deal, and those kinds of things, versus the larger programs that you're really kind of competing to be able to work with them, versus it being a more level playing field for the partnership.
And you nailed it there. The whole competing to work with them angle. You said it very nicely there. And listen, at the end of the day, do what works best for your business, fintech founders. Absolutely. What I think you heard from Kayla, and what I want to make certain just everyone here that might be hearing this message understands is, at the end of the day, all of these bankers are operating these organizations, these sponsor programs. They're all operating based on their core competencies as bankers. They're all, in effect, able to do the things that they're bringing to your fintech program. So I think you heard Kayla mention credit is the focus at Focus Bank. Oh, look at that, the focus of Focus Bank. Yeah, the credit side of the house. There will be others that have a payments focus, others that have a deposit program focus. You'll see others that, and maybe perhaps in the future with Focus, you might get into other sides of the business as well. But when you plant your flag and you say, we are a credit program provider, it's not like you should expect anything less than amazing service, amazing capabilities, technology to support your offering. Plus, you get those added benefits that Kayla mentioned as far as more direct interaction or support with the team members there at Focus. I know that specifically for you all because I've had a chance to meet one of the founders that you work with,
Mm-hmm.
who raved about you, who discussed the development, the co-development of
Mm-hmm.
reporting with their application. So just know that you should evaluate all sorts of different programs just as if you were car shopping or house shopping. Do
Absolutely.
just look around, and you might be pleasantly surprised. And
Yeah.
Kayla, I think that kind of brings us to the topic of the conversation here, and that is if you're a fintech founder and you are looking for a sponsor bank, how in the heck do they make these decisions on whether to proceed forward with you or not? And are there some things that you can do that better position you to get the nod? And this could be if you're shopping for your first sponsor bank or your next sponsor bank or a secondary sponsor bank. You will want to ensure that you have at least a rudimentary understanding of what good looks like for their own internal evaluation process and what you might be able to do to help your chances.
Mm-hmm.
So Kayla, why don't we start there? Because I would say it's been about 6 months ago since I had this conversation that sticks out in my mind. There was an early stage founder that had reached out looking for their first sponsor bank. They didn't yet have any end users, and their projections were fairly loose, fairly grand at this point, which happens. I don't want to be a dream crusher. I definitely want you all to shoot for the stars. But when it came to trying to assist with putting together a business case, I gotta tell you, it was a bit tough,
Mm-hmm.
and we had to have some upfront and very frank conversations about the viability of moving forward and burning some intros with sponsor banks. So let me start by just asking, have you met any individuals, without naming anyone, that might be similar to that founder that I mentioned, kind of early stage, no end users, but we're going to have 100 million by the end of September in users and maybe 20 million ARR. You met those folks?
Right. Yes, absolutely. We've had plenty of those conversations. And I think a lot of it boils down to a couple of things. One, your investor pitch deck is not always your bank pitch
Oh, yes.
deck, because, when you're out, you're fundraising, you want to be able to highlight the upside of the potential for growth, right? You want to show them that, hey, best case scenario, we think this is what this program is going to look like. We're going to be able to scale quickly. We're going to be have huge returns very quickly. And as much as we're in your corner as the sponsor bank saying, hey, we hope everything goes gangbusters, as my
go. Yeah.
we want you guys to go gangbusters and be able to grow and be wildly successful. But a lot of times what bankers are looking at because of the regulatory environment we operate in is not necessarily what you are saying, it's what you're not saying in those presentations. So things like if you are expecting to grow exponentially, essentially right out of the gate, we're looking at things like, okay, how is that impacting the bank's liquidity potentially? Is there risk? How are we going to need to adjust things like reserve that's held by the fintech partner? How are we going to look at their financial position? How are we going to how is the fintech partner going to adjust for the compliance aspect of this? How are they even going to manage a program of that size, especially if at the stage we're talking to them, they're early stage, you may have only a small number of employees, and you're showing us in 6 to 12 months, you've got all of this crazy growth, which is great, but what is your plan for continuing to manage that program and being able to show us that you've thought through that, you've had those conversations internally. Some of them are going to be difficult conversations about things like, at what point are we going to have to raise additional funds? At what point are we going to have to be prepared to add to staff? When is the founding team going to start taking a salary if we're not taking one on day one? We want to see that all of that has been factored in. And a lot of times what we see, especially with earlier stage, is you're great at selling your product. You know it forward and backward. You have a plan for growing it. But because that bank experience is what we bring to the table, we certainly don't expect them to be bankers, although some of them may be. But when they come to the table, being able to almost take things just a step or two further in that planning process to say, we've factored in future expenses with what we've raised so far, and show us what the plan is. We understand it may be subject to change, but don't just stop with this is where we are and this is where we think we can go. What's the plan that parallels that growth over that same amount of time to make sure you're prepared to run that program?
There are so many nuggets that you just shared, and I want to call out a few of them that I heard, and then we'll dig a little deeper into each. But the whole concept of how you started, that your investor pitch deck is not the same approach that you take with bankers and shopping for your sponsor bank. So these can be and should be two different, very, very different things anytime that you're working with banks. You secondarily mentioned, Kayla, or at least what stuck out to me was there's an effect on the bank. Looking your business, formulating this partnership has an actual financial effect on the organization. You mentioned capital, liquidity, etc. So this is where I often guide our kids that it's not always about them. It's not always about you. Sometimes when you're having these conversations with sponsor banks, it's truly not about you. They are thinking through the next steps and trying to figure out, does this relationship make sense, not only for you and where things are today, but the effect that it's going to have on the organization. But what I really want to get into are these next steps. And you and I have discussed this before, that often fintech founders will come with a solid story. They'll have projections, and sometimes they might even be ratcheted back a bit for bank conversations. But there are some things that they can do to think through the process that makes them even more of a viable candidate for the next conversation. And you mentioned some there, but one was, or a couple were, all right, you're getting ready to scale up. At what stage do the founding team members begin to take a salary if they're not doing that now? If you are scaling up to 100 million users in a short period of time, what type of support staff do you need to hire? Or what do those additional tech spends look like? So can you share just a little bit around that kind of concept of what are those next steps that would help you make the decision? I know I mentioned two, and if you have any others, I'd love to hear those as well.
Sure. The expenses are a big part of it. I know we see a lot of prospective partners that come to us and they say, hey, we've raised X amount of money. We think that's going to give us 18 to 24 months of runway, which sounds great. And then when we start digging in, we start seeing things like, well, they factored in, maybe they have factored in salaries. They've factored in, what their marketing costs are going to be, what some of the other expenses might be, what their office space is going to cost and things like that. But when we start digging in, there's no allocation for things like, what about your, the bank fees? Working with a sponsor bank is going to have likely some monthly minimums as well as a fee schedule. Your issuer processor, if you're a card program or system of record, all of those things are going to be additional expenses. And look, I get, none of us are posting our fee structure out on LinkedIn, right, for anybody to just go out. But I think that's where working with someone like the fabulous Stacey Bishop, you have that insight, consulting firms have that insight. There are other contacts in the space that are able to say, hey, before you go into these conversations, this is about this is a ballpark figure that you should factor in for those expenses on a go forward basis. Things like, where is fundraising going to come into play? Are we going to, are we willing to dilute founder equity to be able to grow faster and have more runway and have a better financial position going into this? That's a big question for a lot of founding teams. We totally understand you want to protect as much equity as you can. This company is your baby and it's important to you, and nobody's going to take care of it like you do. But at the same time, sometimes, and I'm going to over exaggerate this, it may not require that, but 50% equity ends up being a lot better by making that investment up front and being willing to do that than holding on tightly to 98% and not letting go. And then it doesn't give you enough flexibility to really enter the space and do it well, no matter how fabulous your product.
Yeah. It sounds as if you take a very consultative approach when you're speaking with the fintechs, not only with the purpose of partnership, but also just helping their business do better in the long run, whether you choose to do business together or not. Kayla, I find myself wondering, when you're sitting in these conversations with fintech founders, is there some sort of a checklist where you're saying, oh, yep, they meet that, no, they don't? First of all, is that it may not be an actual physical checklist, but you do have some sort of a questionnaire positioning diagnostic that you're using? And how often is it a black and white process where, no, you didn't get no here, that means it's an absolute deal killer? Mm-hmm. Or are there scenarios in which perhaps this wouldn't make perfect sense on paper, but we might be able to evaluate other things that could make this more attractive for both? So mm-hmm. I realize that's a two-part question. First of all, give me your thoughts around what are you going through in that initial conversation?
Sure. So we do have, of course, every bank has policies and things like that establish certain limits. And then we kind of have our guide that we use for initial questions, concern, things that, the things that are black and white or can be painted into a black and white box. We have a list or a resource that we use to make sure we have those answers on hand. But I would say overall, at least for us at this point in time, very little of the process is black and white. A lot of it is very gray for us, and intentionally so. We want to be able to have some flexibility and to evaluate, okay, maybe the first way they pitched the idea wouldn't necessarily work. A lot of times what we come up against is the regulatory framework that we have to operate in. And so, there's this great idea. We can see where the demand would be, but the regulatory framework we have to operate in just wouldn't allow for that exact structure. So we do try to take kind of a consultative approach, to your point, to be able to say, hey, here's what we're up against as a bank, and here's what you would need to solve for. Sometimes, founders are flexible and say, hey, we'd be willing to work with that. Other times they say, we're not really willing to shift at this point. And maybe there's a bank out there that can accommodate that structure. So that's all great. But yeah, I would say a lot of it is gray, and trying to see, I keep coming back to compliance and regulations, but I think any banker probably would. We're considering things from a management team and managing our organization in particular and what our risk profile is, but we also have to operate compliantly and make sure all of the regs that apply to our organization are being followed and are accounted for in that process. And sometimes a lot of that is gray and up to interpretation, and whether or not we feel like we would have a solid case if a regulator were to ask us about a particular product. Could we explain it in a way that makes it clear it is compliant with the rules we have to follow?
That's so well stated. Compliance in the regulatory environment are priority one for any bank, especially any sponsor bank. We've all heard way too much bad news over the course of the last 3-ish years around what good does not look like. So everyone wants to be operating in this space. Trust me, fintechs, you want your sponsor bank to be as compliant as possible, even when it feels like they're throwing the fun flag. They're the referee out there on the field and throwing the yellow flags. To the degree that there is creativity or interpretation, I think you heard Kayla mention, and it's consistent with what I hear as well, they would love to be part of your success and to work with you, as long as they can do so in a compliant, justifiable manner. because Kayla does have to take that checklist and you have to take it to other people, Kayla. And that's kind of what I want to get into next. So you have these conversations with these amazing, brilliant fintech founders doing cool things, developing something new, and you have these conversations. It seems like there's no initial red flags. What do you do? What happens next? I'd love to learn about the process.
Sure. There are always conversations after the conversation, out of necessity. So,
Yeah.
I run our department, but I am certainly not the expert in all things. So we have some exceptional resources internally, as most banks. I would say all of the banks that are playing in this space likely have some deep bench experience behind them across their management team, not just within the sponsorship division, but across the bank as a whole. And I feel very fortunate that because of our size, I still have access to the top of our organization. So, it's not unusual for me to talk to our CEO or COO or CFO on a daily basis, talking about things, solving problems, trying to figure out ways to say yes. But there is a formal process after those conversations. And so I want to make it very clear that at our bank, and I would venture to guess at most, if not all of the others, the chief fintech officer or chief sponsorship officer cannot just say, "Yep, we'll take you."
Right.
Nobody has that level of autonomy out of necessity.
Stakes are too high for everyone. Yeah, both sides.
Too high. As much as I would love to sign every great idea I have had, there are controls and checks and balances for a good reason. So we always have conversations internally with the other members of leadership after we've had an initial meeting. If there's nothing in that meeting that tells me or Devin, who's my right hand, she and I often take those together because she really has the operations mind of the process too. So she and I team well together to have those conversations. And a lot of times we'll identify different things in those conversations. I think a lot of the sponsor banks you meet with will have that kind of dynamic. There's probably 2 or 3 people on the call, and all of them bring different strengths to the table, but you can't have 10 people from the bank on every call. That makes it incredibly inefficient. So it's our job then to take what we learn, take anything that really stood out to us as a possible concern, or on the opposite side, really stood out to us as a strength of the proposed program. We take that back to the other members of our leadership team and say, "Hey, here's what we know. Here are the facts about it. Here's where we have concerns. What might we be missing in this conversation? What are the other questions that we didn't think to ask? What are we not seeing? Are there aspects of compliance or regulatory risk that we're not thinking of? Is there risk to the bank from a liquidity or capital planning perspective that we're not considering?" Because there are also things on the other side of the bank that are going on that I don't always have insight. So, we have to really make sure we're working across all sides of the bank to make sure we're all moving together in sync. And so I think you mentioned earlier, Stacey, that it's not always about the fintech itself. It's also about the bank and what else do we have going on? What does our capacity look like? And then, having those conversations. From there, if our, things continue, we have calls with our prospects all along the process to ask additional questions, keep them apprised of where we are in the process. We're collecting more and more detailed documentation as we work our way through the process. And then when we get to the final stages where everyone's really in alignment, we feel like this is a good fit, we have established an oversight committee that I meet with. And then our board of directors, of course, is responsible for the organization as a whole. So they also have a say in whether or not we pull the trigger on onboarding any partner. So when we feel like we're in a really good spot, we feel like we've asked all of the hard questions, we know what we're going to be getting into, we have to get the final approval from those governing bodies within our own organization to make sure they know they've had an opportunity to ask hard questions. And candidly, again, I'm fortunate to have some excellent people on those oversight committees who do ask the hard questions and honestly sometimes think of things that none of the rest of us did. Now, sometimes we have an answer, sometimes we have to go back and get more. But it is important to have those checks and balances. And so I would say it's easy to get fatigued on the fintech side, I think. And I could totally understand that because most banks have some very formal processes and hoops to jump through. But all of it is to protect both the bank and you. Our CEO has told me from the very beginning, we don't intend to get in trouble and we don't intend to let any of our fintechs get in trouble. We're in this as a relationship, which requires all of us working together and having some very clear communication. And so we want to make sure on the front end of those conversations that we're really doing a thorough job of evaluating the partnership before we get married. Dating is the time to work out those issues because it's a lot harder to do once you've walked down the aisle and signed all the legal documents.
So true, so true. And there have been instances, Kayla, where a bank has gotten into trouble and then that left their fintechs out there wondering, well, what are our options? And mainly the options are you shop. You're put on the spot in order to keep operations going if you don't have a secondary or backup. Or even if you do, you may not be able to get switched over immediately. It's a concept that I'm thinking quite a bit about in the space, but nobody wants Kayla or Focus Bank to shortcut any of that process that you heard her discuss.
Absolutely.
You want them doing things well. You want them in a relationship with their examiners and regulators so that everyone is aware of the steps being taken to ensure that they are operating under the strictest limits of the compliance and regulatory environment so that your business can continue to thrive and scale on the fintech side. You don't want to be in that situation where the inverse is true, and that's not great for anyone. And I love what your CEO says, that I also want to ensure that not only are you not getting in trouble, but your fintechs are not getting in trouble because they have a secondary degree of oversight, but more appropriately partnership to help keep them moving in the right direction and away from those guardrails that have been set in place.
Absolutely. And that brings up a good point, Stacey, too, that I would encourage any fintech founder who's watching this to also ask your sponsor bank prospects hard questions. Don't be afraid to, there's obviously, we have processes in place. We're going to ask the questions. We're going to bring up documentation. We're going to require certain things of you in order to be able to engage in a relationship with us. But you should also be evaluating whether or not the sponsor bank you're talking to is even someone you want to work with. So I would say ask those hard questions. What does your relationship with your regulators look like? Is there anything currently that you're able to share? Because we do have some restrictions on what information we can and can't share outside of the organization. But ask things, are there any, has there been any regulatory enforcement action that we should be aware of that you're able to share? All of those things should factor in. What does the management structure look like? What is the reporting cadence? How engaged are you with your board of directors? Do you have the support of your board of directors? Are they skeptical or are they all in? There's a big
huge. That's these are great things. We think about this with job interviews. We hear this all the time that it should be an equal playing field. They're interviewing you, you're interviewing them. It is the same thing, and that's such a great point, Kayla, that this should be a fit. This should be a match between people that you like and like their model and you could see yourself doing business with, and vice versa. This needs to feel good, this partnership from both sides, and it has to make economic sense as well.
Yes.
Kayla, we are going to have to visit again sometime because I'm not sure how this time evaporated. I have other questions for you that we're going to have to get to in the future. So this is not going to be the last time that you see Miss Jones.
Part 2 coming soon.
Oh man, I will tell you, I'll drive on over to the southeast of our fair state, and if I need to. But we got to keep this conversation going because you all sponsor bankers like Kayla, fintech bankers, people that are going to help enact your vision and bring it to life. They want you to succeed. I think you probably heard that in Kayla's voice and everything that she mentioned with her suggestions. It's in their best interest for you to succeed, but it does have to be good business for everyone. And we all have to operate in inside frameworks that work for each other's business. So with that, Kayla, I would be remiss if I didn't mention that Yin had joined earlier and said Yin knows the Atari's version of Boys of Summer. Thank you so much, Yin. Okay, I'm gonna have to make sure you also get that in your inbox, Kayla.
For
But with
sure.
that, until next time, Kayla, any parting thoughts, any parting words?
You know, we wish all of you the best. And I am always happy to be a resource. Stacy, I know you echo the same. So if there are questions after this that come up, feel free to reach out. I'm not super active on LinkedIn. I check it every couple of days, but if you can't get me there, I'm at Kayla at ratoon.com. That's RATOON.com. I'm always happy to answer questions, talk through what it might look like to partner with Focus Bank as your bank sponsor.
Love it. So LinkedIn, Kayla at Ratoon, RATOON.com. At some point, I've got to learn the background behind that one. Any upcoming events that you see throughout the rest of the year, people can look for your face and your shoes?
Yes, don't miss my shoes. I usually post those on LinkedIn so that you know which of my outrageous collection of shoes to look for. We do have some travel coming up later in the year. So we will be at Finovate Fall in New York. We will be at Money 2020 as always. And then we will also be at Fintech NerdCon this year in San Diego in November. So keep an eye out for us this fall. And I would love to shake hands and have in-person conversations with anyone who will be out at those as well.
You bet. Well, I'll see you at a couple of those at least. So we'll have to do dinner, get caught up. Until then, my dear, I want to thank you so much for sharing your expertise and just being such a good steward of this space. Check out Miss Jones. Check her out on LinkedIn, Kayla at Ratoon, RATOON.com, or at any of the upcoming events that she mentioned. And until next time, you will see her again. Again, I will drag her kicking and screaming if I have to share more of her wisdom and insight and that of the Focus Bank presence that they bring into this market as well. So Kayla, thank you, my dear. I look forward to next time, lady.
Thanks, Stacy.
Bye-bye.